Hello, I would like to introduce you to the killer intraday principle, counter-trending the crowd for daily profits. But first, who am I? My name is Vladimir. I'm a full-time Forex trader and I'm a mentor. I have over 12 years experience in the Forex market, in the options market and in the commodities market. I trade stocks as well. My office and my main project is VladimirForexSignals.com. That's where I give my live trading rooms. That's where I give my main mentoring. This is where I give my signals, each and every signal. You might heard about me in other places like VladimirMarketsForecast.com, VladimirRybakov.com, which is my Forex blog, and maybe you heard about me on the DivergenceUniversity.com, which is the most comprehensive online Forex course on the net. That's about divergences, of course. Or you might just heard me about my world seminars I'm holding worldwide. So what is this event, the Pro Trader in a Day live Forex event I'm going to talk about? Can you effectively learn the strategy alone by yourself? Most of the traders suffers from learning their own. That's where mistakes are born. A pilot proved that we made a pilot and we find out that a group learning strategy in one day is the most effective way to learn a strategy. You start and you finish on the same day. You get it all. That's a lot and massive information, but it's all going directly to your mind. You practice it all, you see it all, and all the puzzle is building within one day. So you actually start and you end on the same day and you're ready to go. The things you have to bring with yourself to this event is a basic knowledge of technical analysis, preferably using MetaTrade 4. Why? Because it's the best and the simplest way to trade on the same platform, trading platform, which you are making your analysis. The killer intraday principle, the counter-trending the crowd for daily profits. Let's talk about the concept and the ideas behind these strategies. Did it ever happen that you enter a trade and then you find yourself sit and regret? Did you ever wonder why it happened? Well, the main three reasons for that are the early entry. Many traders are just enter a trade too early. And that's a very known mistake. Identifying patterns early. Many traders think, oh, this is a head and shoulders. I'm going to attack this head and shoulders even before they got all the confirmations required. Many traders enter the flag with the break without waiting for clear confirmation, and I can keep going, but the idea is the same. Most of the traders identifying patterns too early and they enter the trade on the wrong place. And the most common issue is that the market goes against once you enter a trade. You have to be familiar with that. I can sign on that. Just think about it. How many times you enter a trade and then on the same moment the trade went against you? How many times it happened? Did you ever think about why it happens? More about that later. Intraday versus long-term trading. Many traders tend to think that intraday is much easier. You just wait for 1, 2, 3 to happen and you attack your trade, that's all. Well, intraday, in fact, in reality, is much more difficult. Why? Because it's affected by the intraday noises and speculations. All the news, all the speculations, all the manipulations coming during the trading day affect the intraday trading. It requires many more trading hours, let's admit it. To trade the daily chart or the weekly chart, all you need is like 15 minutes per day or half hour per day just to analyze it all and prepare your trading plan. That's all. Intraday requires much more. It could pay more, but it requires more as well. It also requires the ability to take quick decisions as each pip counts. For intraday trading, we want to take 15, 20, 30 pips Depends on the pair, depends on the volatility, depends on the conditions, and that's why every pip count. Just think about it. If your profit is 20 pips or 19 pips, okay, it's a lot. It's a big difference, 5% difference of the movement. Now, if your take profit is 500 pips or 501 pips or 510 pips, that's not what will change the game for you, isn't that? What the intraday sharks are looking for. When I say sharks, what do I mean? I mean the big hedge traders. I mean the big and the hidden on some way options trading. If you know it or you don't know it, the guys that move the market, the guys who cause things to happen, the guys who cause manipulation and speculations, as the options trading. You might wonder how I know that. Well, I was one of them. I used to work for a hedge company during my 12 years experience. I used to work also for a broker, but while I worked for the hedge company, I was the option trading. I traded Forex and traded stocks and commodities, a lot of commodities, but mainly Forex. I learned how the intraday noise happens. And I know, because I learned it there, how the option trader profit while everyone else lose. Okay? Remember what I said at the beginning? Did it ever happen to you that you enter a trade and at the same time it went against you? Guess who is doing that? Not specifically against you, but in general. Because when you enter, be sure that 90% more of the traders enter as well. And option traders, the sharks, they know that. So what are they looking for? They're looking for levels where a newbie would enter a trade. They are looking for fake patterns. Believe it or not, the market creates much more fake patterns than reliable patterns. They are looking for that. They are looking for an obvious stop loss and take profits levels. We all have been through a school of trading. We all know to set a stop loss and take profit above the last resistance, below the last low, etc., etc., etc. We all know the same things. Do you think that these guys, the sharks, they don't know the same? They know the same, but they know much more. They have the best trading arsenal. They have things that we could even only dream about. They're looking for price deviations. They're looking for a simple supply and demand during the day, while they're looking for confirmations from very specific place. And they're using very unique method just to find this price deviation and to cause the intraday opportunity. So what is this trick I'm talking about of the options traders? What are they doing? How they make profits each and every day by taking advantage of simple price deviation while we don't. When I say we, I mean the retail traders. They buy when the public sells, believe it or not, but they know when you are going to sell the intraday. They simply know that. They have their tools. They take advantage of deviations between the call options, which are the buy trades, and the put options, which are the sell trades. Again, because they know to find and identify this deviation. And the most important, maybe, they close their trade before the public, the retail traders, the small traders, will even start to suspect they did a mistake and entering the trade. Then, the option trader, the sharks, they will just knock the button and they will profit from their trade. What is the problem with using candle patterns? Well, candle patterns is one of the most used methods. Everyone today is using candle patterns. Only the old-fashioned traders are using bars or line charts, etc. Today, the candle pattern says a lot. Okay, it's well visualized. It says a lot. There's a lot of psychology inside the pattern, and that's why we all love the candle pattern so much. But they have some problems inside them. And so why traders tend to quickly lose passions when it comes to candlestick patterns? Traders tend to forget that the candle pattern ends only when it ends. I have a question for you. A weekly candle pattern, when it starts? At the beginning of the week. When it ends? At the end of the week. So if it is a doji, let's say this is a weekly candle pattern, if it's a doji on Monday, who guarantees you it's going to stay doji on the end of Friday? Right? No one. And where is the problem? People find a weekly candle pattern, or daily, or 4 hour, or 1 hour, and they think, all right, this is a beautiful candle pattern, but this is never ended. How can you call a pattern even if it before it became a pattern, right? The too good to be true patterns make the crowd jump into the trade and try to join the party. Sometimes we are looking at the chart and we say, wow, this pattern is a must make a move pattern. After such pattern, it's for 100% going to move any pair you choose, right? And that's make us jump in and try to enjoy the party, and that's what the option traders want. We will be in, they will be on the opposite direction. They will make profits because of our mistake, because we are the crowd. On some brokers, the patterns are different due to the difference on MT4 platform time zone, and that's another famous mistake traders do, and that they're looking on one platform for entry, they're looking on another platform, they see different patterns, and they just don't know what to do. Alright, we are going to find solutions for each of them. And the daily candle patterns to the rescue. How can we use daily candle patterns for the intraday trading? Actually, it's very simple, and all that I'm going to share with you and teach you step by step how to take the very famous candle patterns we all know and how to use that for intraday trading exactly like the options traders do. I remind you, I come from the options trading world. I know these tricks. I've been doing that. And I've been doing that all time long as I could allow myself to leave that, because it's not easy, and trade for myself. And then I started to convert the options trading world, the call and the puts, into the spot market, the market we all love, the market we all enjoy from, the market we all want to make profit from. I transferred and converted this method of option trading into the Forex market, the regular Forex market as we all know. And in this event, I'm going to show you how to take a daily candle pattern and how to use it successfully into our intraday trading, while identifying and using very simple and yet very logical combination of methods. While no one else is even thinking about it, you will have this advantage. So why I love the daily candle patterns for the intraday trading? Because they ignore the intraday noises. They simply ignore all the zigzag during the day because of the news, because of speculation, because of the manipulation. It simply ignores them. That's the pattern that the option traders are basing their decisions on. And as I said, in this event, I'm going to teach you how exactly. I promise you will be amazed. This principle is never seen before on the Forex market. And the daily candle pattern provides enough time to analyze them and the main trend. So just think about it. If we know to read the daily candle patterns, if we know to read the psychology of the options traders, we can go for the intraday trading, combine that together, and guarantee, yes, guarantee intraday profits. Now don't be confused. I cannot guarantee you here 500 pips per trade. That's not what it is. What we are going to do is we are going legally to learn how legally steal from the market. And we are going to learn how never try to take it all from edge to edge. Our goal is to find the deviation that the option traders are looking for in their side and enjoy from that, take these profits in our Forex spot market, the market we all love so much. We are going to learn how to buy when the crowd actually sells. I'm going to teach you how to buy instead of a sell that you would be doing without learning and knowing this trick. We're going to learn how to sell when the crowd buys. We're going to use the main trade to find intraday price deviations. All that I'm going to teach you in this special Forex event. But it's not all. There is also an indicator that just helps us. There are many pairs. We cannot find patterns and specific conditions for each of the pairs. It's simply impossible. So this indicator is going to help us identifying patterns. It scans all pairs simultaneously. It gives us audio alerts, so you don't need to just stick to your computer. It can also email you. It gives us the ability to control alerting times, and I'm going to explain you how important the time and the specific hours for this type of trading. You know that options trading are not working 24/5. You know that. Options trading are normally working like 1 hour or 2 hours until they hit, right? Until they find their entry on the very specific condition somewhere, even not all the pairs, and they just go attack and make profits. Thank you very much, and they go home. That's what we're going to learn how to do the same, but on the Forex market. And it will of course give you the chance to control the type of the patterns to detect, and I'm going to teach you what patterns are the best to use this method. But this event is only limited for 100 seats. The reason? I simply cannot handle more during the live event. So if you want to be there and ask me questions live, get the answers live, learn it all live, make sure to register and make sure to be between these 100 seats. If you're going to be there, I want to thank you in advance for attending this event, and I can guarantee you this is something you never seen before. Thank you very much for your time. I hope to see you there.